Good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala. Along with me is Harsh Saita as well. Very good morning to you as well. And Harsh, what are we seeing in terms of handover coming in from the US markets? Exciting day or a dull day again?
Well, yes, pretty much flat, Vinny. But before that, good morning to you, our viewers, as well as you, Vinny. So we're looking at a largely flat day, or rather a slightly negative on at least US indices. We can see the SGX Nifty absolutely flat, down 10 points as we speak. But where US indices are concerned, the Dow was up just 1 point, so absolutely flat on the Dow. The SGX, the S&P 500 index, beg your pardon, was slightly lower in trade yesterday, and so was the Nasdaq. Mind you, fifth straight day of decline for the S&P 500. The SPX was down around 0.1% in trade yesterday. So we are seeing a slightly lower Q despite 4 consecutive days of decline through this week, and that's largely on the back of fears of a recession, as well as, of course, the focus coming back on the Fed. We are expecting to see a 50 basis point rate hike by the Federal Reserve coming through in the middle of December. And that is keeping markets largely muted, as well as a bit fearful with regard to them overdoing things or trying to, get into an over hawkish stance, as we would say. The Nasdaq was down around 0.5% in trade yesterday. That's where that is at. Where the US futures are concerned, still in the minus as we speak. We're seeing US futures in the red at the moment. The Nasdaq futures are down 0.5%, the Dow futures are down around 1/3%, and the S&P 500 futures also down between those two numbers. When we're looking at largely the 10-year bond yield, that will be the other focus area to focus on when it comes to the FOMC meet. The 10-year bond yield below that 3.5% mark, and that puts pressure on the dollar as well. But that's where we're at, Vinny, and that's what we're penciling in, and Asian markets are penciling in early trade today as well.
Absolutely, but we have to look at one of the commodities, that is obviously the crude oil prices. We have seen them falling again for the fourth straight day overnight, and as of now, yes, I've seen a mild bit of gains in terms of crude prices that have opened up. But just as we saw yesterday that China announced that and appeared to relax some of the rules coming in terms of the zero COVID policy, what actually happened is the US oil inventory data that showed a huge build up in terms of the petroleum products that outweighed overall the nation's weekly draw in terms of crude as well, and that is what sent the crude oil prices falling and plunging in trade for the fourth straight session. When you look at the WTI crude oil prices, somewhere around the $72 per barrel mark. Brent crude oil prices also $77 is somewhere around. It's trading at $77.6 to be precise in terms of the Brent crude oil prices. Now, obviously, that's a major impact that we've seen coming in, and obviously, oil's latest slide came especially after the EIA report that came in, which is the report which is combined of gasoline as well as distillated inventories for the last week, which showed a bit of a huge jump up in terms of the build-up of the products as well, and that is why we're seeing oil prices. And obviously, let's not forget, they've given up all their years 2022's gain, and now that is what is happening in oil prices. WTI is obviously below those gains, and they've actually given up all those gains that they saw in 2022. Brent crude oil is also somewhere around that mark, just a few dollars away from giving up those gains as well.
Well, yes, with regard to events to watch today, we are expecting state election results. Of course, we're seeing election results in Himachal as well as Gujarat to come through. Also, the other piece to look out for is the initial jobless claims in the US. That number will come out, expected around that 225, 230,000 mark. We're also seeing cyclone to hit Tamil Nadu as well as Andhra Pradesh on the 8th of December. Those three things to really look for. With regard to corporate action, BLS goes ex-bonus today. BLS International, Hatsun Agro has the rights issue. The record date is today. Kirloskar Brothers EGM is also expected on the 8th of December. That's largely what we are penciling in. Also, Dharmaj Crop Guard is going to have its listing today as well. So those are largely the events to watch out for today.
Okay, Those are the cues, events, and handover coming in from the global market. But let's look at the top global headlines coming in as well. We have the Walmart CEO Doug McMillon, who said that he sees greater potential in terms of supply chain automation. He also said that the food has driven gains with higher income customers, but the supermarket chain will also bet on e-commerce going forward to retain the customers. Now, inventory for the company is in a good level, according to McMillon, while however, he flagged off some of the stubborn inflation hitting consumables as well.
Well, American consumers are tapping the brakes on spending, and a recession is likely in 2023, according to the CEOs of two of the largest American banks. After 2 years of pandemic-fueled double-digit growth in BofA's card volume, the rate of growth is slowing, according to its CEO. It was a similar story at rival Wells Fargo, and according to CEO Charlie Scharf, who cited shrinking growth in credit card spending also hitting that bank.
Morgan Stanley has reduced its Apple iPhone shipment forecast for December quarter. The forecast was slashed by an additional 3 million units. Now, the firm had already cut shipment expectations by 6 million units in the month of November. It now expects Apple to ship around 75.5 million units amid turmoil at Apple's biggest plant in China.
And a US judge has sentenced former Theranos Inc President Ramesh Balwani to about 13 years in prison on charges of defrauding investors and patients. This is weeks after former CEO Elizabeth Holmes asked for more leniency on the same charges. US District Judge Edward Davila in San Jose, California imposed the sentence on Balwani, who was convicted by a jury on 2 counts of conspiracy and 10 counts of fraud in July.
Vladimir Putin has admitted Russia's war in Ukraine could turn into a long-term process as he sought to defend an invasion. Russian troops have been forced to retreat, and even air bases deep inside Russia have come under attack. Speaking to members of his personal Human Rights Council, Putin also claimed that Russia would not use nuclear weapons first in any conflict.
Well, and in an interesting development, the European Union reached an agreement on a law to increase the price airlines pay for planet heating carbon dioxide emissions. Airlines running flights within Europe currently have to submit permits from EU's carbon market in order to cover their carbon footprint. But most of those permits are for free. This free permit will now phase out from 2026. This means airlines will have to pay for their CO2 permits, which will act as a financial incentive for them to pollute less.
And Microsoft has entered into a 10-year commitment to bring the gaming title Call of Duty to Nintendo. The agreement will bring popular first-person shooter series for Activision Blizzard to Nintendo game console for the first time. Activision $69 billion acquisition has raised concerns among regulators regarding the stifling competition with rival Sony, criticizing the deal. In a tweet, Microsoft's president Brad Smith said that they were open to sit down and ink a pact with PlayStation as well.
Well, and Time magazine has named Ukrainian President Volodymyr Zelensky as well as the Spirit of Ukraine as its 2022 Person of the Year. Zelensky's decision to remain in Kiev and rally his country amid the ongoing war, which started with Russia's invasion on the 24th of February this year, is what will remain in everyone's memory, is what Time editor-in-chief Edward Felsenthal said. Where Zelensky shares the 2022 title with the Spirit of Ukraine, which embodies the common man of Ukraine who has fought behind the scenes.
India is in a bright spot in Asia. That's the word coming in from Citi CEO Jane Fraser, while she is concerned about a recession in the US in the coming years and says that Europe is already in a recession. She believes India has a bit of a swagger about itself. This is aided by a recovery in consumer demand across Asia.
With that, we'll slip into a very short break. More on the domestic front on the other side.
Welcome back, and you're watching Market Cafe on ET Now. And let's just talk about the insurance space, because very soon insurance companies will start selling wellness products like gym membership and yoga classes. Government has proposed such services to insurers in the proposed Insurance Amendment Bill 2022. ET Now's Anurag Shah has more details on this. Anurag, take us through those new details that are coming in.
Insurance Amendment Act will open up a lot of new avenues for insurance companies and which will help them to increase their revenue and profitability. As suggested in the draft proposal, insurers will be allowed to offer services and product related to insurance also, which means that going ahead, general insurers or life insurers will be able to offer wellness product, will be able to offer managed care product, will be able to offer disease management product also. Presently, insurers offer wellness product with a tie-up with third-party companies, which is not much profitable for the companies. But after the amendment in Act, insurers will be able to offer standalone wellness product, standalone managed care product. So it will also help insurers to have a proper understanding of their customer about for underwriting of the product, for the risk management, and they will be able to monetize their customers also through standalone wellness product. So it will be a very big game changer in insurance industry, that apart from dedicated insurance product, insurance companies will be offering related product like wellness product and managed care products, which will help them to increase their revenue and at the end their profitability also.
And to understand more about this, we had spoken to Bhabatosh Mishra, Director Underwriting Products and Claims at Niva Bupa Health Insurance, as well as Amitabh Jain, Head of Health Underwriting and Claims at ICICI Lombard, to understand this. Let's go cross and listen in.
Just wanted to clarify one thing, that even today wellness products are allowed to be sold along with the health insurance policies. It's not that we don't have that provision. A lot of wellness products are there along, which are sold with the health indemnity products even today. But they all come with the health policy, either as an add-on or as a rider, and they go along with the policy. What we are hearing is that now there is a plan that a lot of these value-added services, not only in health, but we are hearing even in other products, would be allowed to be sold on a standalone basis. Now that has huge ramifications, both as an opportunity for insurers to have some kind of a fee income source getting developed over a period of time.
I must say that we need to wait out a little longer, because as we see, this is a very, very strong enabling provision, proposed amendment to the Act. And I would like to believe, and it is appropriate, that we read it alongside the amendments to the IRDA Act as well, which is proposed. Now, as we see, one, the Insurance Act's amendment broadens the horizon. Of course, what is very clearly visible is focus on insurance in general and health insurance in particular to be a much bigger industry, achieve much faster growth. For obvious reasons, the penetration being very low in our country has other spin-off benefits.
Well, yeah, sticking to insurance, we're going to quickly take a rundown on the numbers, monthly premium growth numbers that have come through. New business premium has seen a good bounce. HDFC Life saw 41% growth there. SBI Life, in fact, down 32%. ICICI Pru 1% higher. Max Life 11.5% higher. Bajaj Alliance 9% higher. And LIC 51% higher. Mind you, this is new business premium. Where APE growth is concerned, we are seeing a decent bounce there as well. We're looking at life insurance premium growth bouncing back. Retail APE for the industry grew 22% on a year-on-year basis in November. And among the listed private players, SBI Life and HDFC Life delivered strong growth even on the APE front, while ICICI Pru Life and Max Life reported a decline to a flattish kind of a growth when I'm looking at it year on year. The biggest life insurer, of course, LIC, delivered strong numbers as well with APE growth of 30% on a year-on-year basis. So we're seeing all those numbers trickle through, and there will be some impact on some of those stocks in trade today as well.
Okay. And moving on and getting some update coming in on the fertilizer space, we have Mansukh Mandavia, the Union Minister of Chemicals and Fertilizers, while inaugurating the Fertilizers Association of India annual seminar, invited global fertilizer companies to set up manufacturing units in India. He also spelled out the steps India has taken to become self-dependent in urea production. Let's go across and listen in.
Government has facilitated various such agreement and MOU between Indian fertilizer companies and foreign suppliers to ensure stability in fertilizer supplies to our farmers. Concrete steps are taken to promote Make in India in the fertilizer sector by reviving 5 closed urea plants. By 2025, India will become self-sufficient in urea. This is also an important time for global suppliers to understand the dynamics of big market like India and give us a preference treatment.
And on this front, let me also bring in my colleague Prakash Priyadarshi, who's going to give us a breakdown of or about this fertilizer piece. Prakash, tell us more.
See, the fertilizer minister was addressing the industry in an event today, and he made an appeal to the industry to adopt new technology to bring down the input cost. He said that last 3 years has been really challenging for the government due to high fertilizer prices in the global market. It had forced government to increase their subsidy amount to supply adequate fertilizer products on relatively cheaper prices to the consumer. Despite of all odds, government ensure that the sufficient amount of fertilizer products be available to the farmers. Apart from that, minister has also advised companies to diversify the import market and go for long-term contract to bring some stability in the prices going forward. Some long-term contract has already been done, but minister has encouraged companies to do some more long-term contract going forward. He has also asked global fertilizer suppliers to understand the problems and need of the large buyers like India. He used this opportunity to invite global fertilizer companies to set up manufacturing unit and fertilizer facility in the country.
Okay, on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more stock-related updates after this short break. Welcome back, and you're watching Market Cafe on TV. Now, let's just look at what the Asian markets have done and how some of the other commodities are shaping up as well. Asian markets seem to have opened up a bit mixed coming in, given the handover that we have from the US markets. As of now, Nikkei trading down with cuts of almost 0.8% in trade. Shanghai down almost 0.2% in trade, while Hang Seng is trading with mild gains of almost 1% that we are seeing coming in trade for Hang Seng. Let's not forget, China did say that they will be relaxing some of the restrictions coming in on the COVID-19 policy as well, and the zero COVID policy that they do have. So that is a factor that does come into play as well. Kospi 2 has actually opened with a decline and of around 0.87% in trade. That's 0.8% in trade. So mixed opening. What is coming in terms of the Asian markets, investors are weighing some of the risks that could actually come in on the economic risk that we could see coming in. Negative sentiment is something that is factoring into play for the Asian markets as well. Let's look at some of the commodities. Okay, actually before we go to the commodities, when you look at the US stock futures as well, seems a little unchanged in trade as well, and that is why SGX Nifty also indicating a bit bit of a muted start coming in for the Indian markets. Now, obviously, in terms of commodities, we did give you all an update in terms of oil prices, which have seen a bit of a decline coming in overnight. As of now, morning trade seeing a bit of a mild positive gain coming in there. But in terms of the gold prices, what we're seeing in terms of the opening, yes, overnight it did see a jump coming in. As of now, they've opened up in the red, and gold prices still continue to trade below the 1,800 level. 1,794 is where the gold price is at. Let's not forget US dollar yields as well as the slip of on the Fed slowdown bets. That is something that is keeping gold prices in focus as well.
Well, thanks so much for that update, Vinny. But I'll quickly welcome in Lisa, who's come in. Good morning, Lisa. And talk to us about what are the stocks to keep an eye out for at 9:15 when market opens today.
Well, yes. So starting with the IPO update, Dharmaj Crop Guard will be getting listed today, and the street is expecting it to get listed at an IPO price of 237. Street is also expecting a strong listing as the IPO was subscribed 35.5 times. And the November life insurance data is also out, where LIC delivered strong numbers with overall APE growth of around 30% year on year. SBI Life and HDFC Life has delivered a strong growth, while ICICI Pru Life and Max Life have reported a decline and a flat growth respectively. Macrotech Developers Board has approved a QIP issue from the promoters, and the floor price is set at a 4% discount at rupees 1,022.75 rupees per share. Abacus Asset Manager has acquired 79 crore shares at a 4% stake in Stylam Industries. So the stake has increased from 2.3% to 6.3%. Other key shareholders are 6 Sense India Opportunities and Quant Mutual Funds. Solar industry has updated in its management meet that the domestic market is expected to remain strong with a volume-led growth of 12 to 15%. And they also plan to invest a capex of rupees 400 to 450 crore across the business segment. In global business also, some markets are seeing a turnaround. Lumax Industries will be setting new greenfield project in Pune with a capex of rupees 175 crore. The project is for new orders for advanced lighting solution, and the turnover is expected to the tune of rupees 600 crore post-commissioning. HCL Tech has announced a new collaboration with Intel Corporation and Mavenir to develop 5G network solutions. And lastly, Himalaya Finance, which is promoted by Ashish Kacholia, they have acquired 55,000 shares where the stake is worth 0.53% in Knowledge Marine and Engineering Works. So these are the stocks that investors will have to keep in their radar today.
Okay. Keep an eye out on all the stocks, but let's move on to an ET Now exclusive. In the upcoming union budget, the government is unlikely to tinker with the import duty on gold despite an increase in the cases of smuggling. Sources tell your channel that due to the high current account deficit, Finance Ministry is not in favor of any reduction in import duty of gold. Let's go across to my colleague Meghna Mittal, who's joining in with us with more details on this.
Right, so if we see currently the import duty on gold is at 12.5% plus the 2.5% agri infra development cess that is there, that takes the total import duty on gold to 15%. Now we know that the industry and the Commerce Ministry has been seeking a cut in the import duty of gold. They have been saying that it is one of the factors why the smuggling in gold is also on an increase. But now what the sources are confirming to us that Finance Ministry is not in favor of tinkering with the gold import duty. They are not looking at any change in the gold import duty in the upcoming union budget. Now the reason being that the sources are confirming to us that the current account deficit that we are seeing is already on a high, and they do not want a reduction in import duty to lead to a further increase in the current account deficit. They do not want to risk that. This is one of the reasons they are not in favor of any cut in the import duty of gold. Also, what the sources are confirming that the government does believe that there is no as such correlation between increase in smuggling and high import duty, and if smuggling has to be checked, the government believes the artificial intelligence and other measures should be put to use so that smuggling can be checked and stopped. But cutting down an import duty, they do not believe will lead to reduction in smuggling and may also lead to increase in the current account deficit. So what these sources are confirming at this point is that in the upcoming union budget, any change in the gold import duty is very unlikely.
Well, thanks for that. Moving to news from New Age Tech. Fino Payment Bank, backed by the likes of both BPCL and ICICI Group, hopes to provide banking solutions to anyone and everyone. They firmly believe that with the help of partners and merchants, they can truly accomplish financial inclusion. But how do they manage to make money? They are the only profitable fintech, by the way. Fino's MD Rishi Gupta took a stroll with my colleague Nayantara Rai down to the streets of Noida to one of the merchant stores to understand how it all works. Look at that one.
In our business model, it's a very asset-light, scalable model. For every transaction we do, roughly 60 to 70% is shared with the merchant.
And is that the industry norm?
That's more or less the industry norm. You can say about 60% is the industry norm, which is shared with the merchant. So it's a bhagidari scheme. The merchant benefits. If the merchant is making money, then only we make money in a way.
Of course.
So the merchant gets the transaction for us.
It's all UPI based.
So there are different products like cash withdrawal you can do on a micro ATM through your debit card or through Aadhaar, which is again your fingerprint. You can transfer money on remittances through mobile.
Can you show us a demo?
Yeah, please.
So let's go to a demo. Let's meet your merchant as well.
नमस्ते सौरभ जी, क्या हाल है आपके?
नमस्ते.
फिनो के साथ कार्य करने के लिए धन्यवाद. नयनतारा जी हैं, आपसे कुछ पूछेंगी.
हमारे दर्शकों को थोड़ा डेमो दिखाइए. मैंने तो कभी माइक्रो एटीएम देखा नहीं है. मैं आपको सच सच बोलती हूँ, मैं कोई धंधा करती नहीं हूँ, मेरी नौकरी है. तो आपको मुझे माइक्रो एटीएम दिखाना है. मैं देख रही हूँ कि यहाँ लिखा है एक साइड कि यहाँ फिनो पेटीएम बैंक की पासबुक भी मिलती है. I mean it's a proper store. You got ATM cash available. क्या क्या सर्विसेज है? सब सारी सर्विसेज है बैंक में.
इसका नाम ही इसीलिए लिखा गया है कि केंद्र एक और सुविधाएं अनेक. यहाँ पे अनेक तरीके की सुविधाएं आप ले सकते हो.
ऋषि जी आप पीछे जाइए and you show us as the big boss और फिनो के साथ डेमो कैसे होता है.
I'm showing a micro ATM transaction where you can actually through a micro ATM you can withdraw money. Let me put this card inside. So easy to withdraw money through any bank card. You can withdraw it through the micro ATM machine.
Well, technology and very interesting conversation there. And we'll switch over, and just like the Indian market saw FMCG indices rally yesterday, the CEO of Reliance Grocery Retail is bullish on the sector's growth. He shares how India's consumption growth and premiumization story is still intact and doing in fact better than the rest. Here's an exclusive conversation he had with ET Now's Aishwarya Patil.
What I've learned is that the Indian consumer, when it comes to food, fashion or even entertainment, is as much an asserting consumer as she is an emerging consumer.
We are here from the sidelines of the India Food Forum, and you're chairing it. You've attended and given speeches at some of the events that took place at this forum today. What were your key takeaways from the food industry? There are D2C brands, there are some legacy brands also who have come here today. What are some of the key takeaways you would say from this food forum?
The mood at the food forum where dozens of brands and retailers come together, the mood is very bullish and very entrepreneurial. I contrast it with the whole mood in the rest of the world, and when we meet people who operate in the other parts of the world. I think the consumption story, the growth, the premiumization is all intact and is kicking. Indeed, some of the entrepreneurs and their enthusiasm actually up my risk quotient and my ability to take bets on this Indian consumer.
Okay. On that note, we're going to slip into a very short break, but don't go anywhere because we have an exciting lineup for you all on the markets. And starting with the battle for the states, we have at 8:15 Swaminathan Nair, consulting editor of ET Now, joining us with us. While talking about the markets, we have Rahul Chedda joining with us, who's the chief investment officer at Mirai Asset. While update on the auto sector and auto markets for Motown, we have Rakesh Sharma, the ED at Bajaj Auto, joining in with us at 9:35. While in terms of an era of mass layoffs, to understand that, we have Ritupana Chakraborty, co-founder and executive vice president of Team Lease, as well as Dr. Abhishek Kumar, head of Center for Career Development at IIT Guwahati, to talk to us about that as well.
Welcome back. Good morning. You're watching Market Cafe with us on ET Now. Let me bring in Vamakshi, who's with us in the studio. Vamakshi, talk to us about all the brokerages that are meaningful and material that we must keep an eye out on today.
Well, absolutely, Harsh. Let's first start off with a sector that you track closely. ICICI Bank is on our radar after Morgan Stanley's report has come in. Now they're saying that they're seeing loan growth holding up quite well, and this is coupled with benign credit cost. They're expecting earnings to be strong going ahead, and in fact surprise on the upside in 2023. Valuations for this counter are also looking attractive, which is why Morgan Stanley has maintained an overweight on this counter. They've also given a target price of 1,250 per share. Now the next counter on our radar is AU Small Finance Bank. A note has come in from Motilal Oswal, and they're saying that robust growth potential in secured business loans as well as commercial banking is what they've observed. Prudent underwriting, in their opinion, could enable strong asset quality going ahead, and given the expansion in margins as well as controlled credit costs, the company has reported a healthy performance. So on the back of that, Motilal Oswal has maintained a buy on AU Small Finance Bank and given a target price of 750 per share. And lastly, we will be keeping an eye out on Bank of India after Credit Suisse note, and now they believe that the profitability of the company has improved and is improving. The company also has a strong capital position, and given the strong industry dynamics, they expect Bank of India's ROE to improve to nearly 10%. Valuations for this counter still leave room for re-rating. So on the back of that, Credit Suisse has upgraded its rating on Bank of India to outperform. They've given a target price of 105 per share.
Okay, Vamakshi, thank you so much for that update coming in this morning from the brokerages. But let's move on. Indian markets are looking good for the next 3 to 6 months. That's the word coming in from Punita Kumar Sinha, the managing partner at Pacific Paradigm Advisors. Let's go across and listen in to what more she has to say.
From a growth perspective, definitely India stands out quite well. And many of the global companies that I'm associated with, and I'm on the boards of a few of them, really everybody is looking towards India for growth. So whether it's for consumers, whether it's for office space, whether it's for outsourcing, R&D, software, technology, I think India is where everybody is looking to increase their footprint. So definitely from a growth perspective, I think India is definitely looking very good. Relatively, of course, absolutely, the numbers are in the 6 to 6.5% range, which is slower than what it's been in the past. But from the rest of the world's perspective, India has really benefited from all the shutdowns and the supply chain issues arising from China. Now, of course, inflation, interest rates are a concern globally. I don't see inflation, in fact, in India doesn't seem quite as bad as what I see in the US. And in terms of the recession, I don't see a huge amount of slowdown coming in India. And frankly, I don't see a huge slowdown in the US either. Technology is a sector that has done really badly globally this year, and India has also been affected. So I do think that valuations in this sector are beginning to look relatively better. So at some point, I would be looking to add to technology. In terms of fintech, anything consumer related, in India, particularly in the financial services space. That space is going to continue to see growth. So I think that's a space where there will be new opportunities, and the current opportunities as well, if the valuations are looking good, is a space that is a long-term theme. In terms of global cyclicals, I think commodity prices are still a bit of an issue. Oil could, as we head into the winter months, we don't know how Russia is going to respond, and how they're going to handle all this oil embargo, etc. So I do think that oil prices, we may see volatility in commodity prices, and so some of the metals and other sectors might continue to see some kind of margin pressures.
Well, interesting chat there. When we're looking at fertilizer prices, and the availability for fertilizers is normalizing now, according to Paradeep Phosphates MD Suresh Krishnan. Let's go across and listen in to a slice of our conversation with him.
Since the war in the month of 4th week of February 2022, we have seen a big surge in terms of prices of all raw material for fertilizer and also the end product itself. We have seen that the ammonia prices have reached a 4-digit number of over $1,000 per metric ton. We have seen phosphoric acid and phosphate rock prices also correcting equally. But of late, based on various steps taken, various supplies coming in to India, and the measures taken by the government along with the industry, we believe that the 30 to 40% correction in some of the key fertilizers like the phosphatic fertilizers already taken place. And we expect that the price trend should continue, and over the next 6 months should see a much better stability and a reduced global prices as far as the raw materials are concerned.
Government is encouraging companies to do long-term contract in terms of fertilizer prices so that some stability can be brought in. So which are those markets you are trying to tap in?
Well, government is quite clear that given that India imports most of the raw material for phosphatic fertilizer and also gas for urea manufacture, a long term will always be beneficial, because longer the term, you could finally end up getting much better pricing. And the focus area seems to be the North African market, where substantial amount of phosphatic raw material is available. Middle East continues to be a focus area, both for phosphatic fertilizer and buying in ammonia and sulfur. So these are the large markets that one is looking at today.
If I talk about the PPL strategy going forward in terms of market expansion and achieve growth as per your target, so what should be the strategy going forward?
Well, PPL is, we just did an IPO in the month of May 2022. And during the IPO roadshows, we have clearly indicated a roadmap in terms of taking our capacity to 3 million tons from the existing capacities of 1.5 million tons. And we are well on track for it, and we believe that we already have a run rate which is close to 3 million tons per annum.
Well, and Tiger Global-backed startup Vedantu has become the latest company to let go of employees as the edtech firms chase profitability over growth. The Bengaluru-based firm has laid off 385 employees, which is 11.6% of its workforce, in the third such layoff this year alone. The company said it would be offering severance as well as placement opportunities to the impacted employees. The company earlier laid off 424 employees in May, while it had sacked around 100 workers in August last year as well.
Okay. Let's move on. And in terms of inflation, it's not over yet, says the RBI Governor Shaktikanta Das. He says that the RBI will continue to battle against inflation and that its actions will be nimble. Let's go across and listen in.
While being watchful of the impact of our earlier monetary policy actions, we will keep Arjuna's eye on the evolving inflation dynamics and be ready to act as may be necessary. Our actions will be nimble and in the best interest of the economy. The aspect of growth will obviously be kept in mind. Now, over the last few days, and as usual at the time of every monetary policy, pre or post monetary policy discussion, there is a lot of discussion in the media, in the among various informed circles, whether the RBI statement is hawkish or dovish or otherwise. Now, I leave it to you to interpret whether it is a hawkish statement or a dovish statement or it is something else. But so far as we are concerned, I would like to state that the growth continues to maintain resilience. 6.8% in the current context when the rest of the world there is acute slowdown of growth. 6.8% is a very strong growth impulse. That is something, the first point. Second thing is that the problem of inflation is not over, so therefore the battle against inflation has to continue, and we are in a state of, we will monitor all the incoming data, we will also continuously assess the future outlook, and we stand ready to act as may be necessary from time to time. The focus on inflation control continues, and there will be no let up in our efforts to bring down inflation to more manageable levels, and as we have said, first to below 6%, that is within the target range, and then move closer towards 4% target.
Well, yes, that was the RBI governor as part of his speech post the MPC meeting yesterday. But with that, we're completely out of time. Mind you, 35 bips rate hike by the RBI. We're looking at 18,650, and that's where the SGX Nifty is currently at. Largely flat, at least at the moment. Of course, the market on the other side. But for now, from Vinny, myself, and the whole team that puts the show together, thanks for watching.